Hey everybody, this is Hardin Tate with RedwoodForex.com, and I wanted to recap a trade idea that I mentioned last week. Now, here's the picture of the actual trade that I had mentioned. I ended up not taking this trade. I went on a road trip for a few days, so I was away from the computer, so I didn't take it, but it would have worked out the way that we had intended. So here's the original picture that I posted, and here's an actual live chart of what's going on right now. So here's the bearish outside bar that was in question, and it closed through the 50% fib retracement level and the big round number of 0.78. And I mentioned that when price got back to this area, it was probably going to hold for a good sell. And look what it did. It touched the 78 level and then went down for about 75 to 80 pips. Now I mentioned to sell at the 0.779 level just to give about a 10 pip buffer in case it didn't make it all the way up, but it did. And it made its initial push down, and I mentioned to take profit around the 0.772 level. It didn't make it. It came within about 10 pips of it, but nonetheless, you should have moved your stop to break even, or at least taken some profit, since we were up over 50 pips. You want to try to bag that. So why did it stop here? Well, if you take a line and draw it to about here, about the 0.774 level, price had stopped here, and you can see it kind of interacted with this high, these opens and closes here. I'll put to this candlestick view so it looks better. This high, these opens and closes right here, these lows right here interacted with. You can see it played around here and here in the past. So obviously it was a level strong enough that traders were aware of it and jumped back in the market and made a buy. Now, I didn't take this trade, but if you did, you would have made some money if you had moved your stop to break even, which you should always do once you hit a target of some value. But the other thing that was interesting, and this I wanted to kind of show you how the market works, is it made its initial move down after touching the 78 level, and then price popped above the 78 and fibble, closed above, made a bullish outside bar, and as we know, support should turn into resistance, and resistance should turn into support if it's a good strong level. And right here, so we made our trade where we would have made our money, and then price rose up again, closed above the 78 and fibble, and the thing that's real important here is that price was able to close above it and actually had a decently strong close, about 30 pips above. And then price made its next move to the 61.8 level, and then it came back to the 78 level. And you can see it played around with it, but nonetheless it was able to hold. And once traders saw that it was able to hold, price took off. So I think that's a very interesting way to show how dynamic the market is and how you have to move along with it and learn to read it. It's just the 78 level coupled with the 50% level is just very strong, and depending on which way the market closes, you have a very good indication of where the market's going to go next. And now look at this. Price has been able to close above the 61.8 level, which is also coupled with the 79 level. So it'd be very interesting to see if price is able to hold in this level. It doesn't seem as strong as the 50. It doesn't have as much history, but there definitely is some history to it. We have this little point right here, and in the past you can see price has interacted with it. So just wanted to recap that, and I hope you were able to learn something off of this, and have a good day. Also, please remember to visit RedwoodForex.com. We're a Forex signal service and also free educational website. So go check it out and see what you can learn off of it. Thanks.